Welcome to the weekend edition of the Fear and Greed Business Headlines, the week that was a wrap of the biggest stories over the past week. I'm Sean Aylmer. It was a week of big market swings, crazy cryptocurrencies, they're always crazy in my mind, economic pronouncements and corporate revelations. It was a pretty incredible week for equity markets around the globe, with big falls and big rises. There's a re-rating going on. Pandemic-related stocks and markets, tech companies, cryptocurrencies, those sorts of assets are struggling, while more traditional investing is coming back into vogue. Overlay any economic commentary out of the US, Europe or China. For example, Beijing said it wanted to build its own iron ore business and find new providers away from Australia, and stock prices become very volatile. The local market has been buffeted by the commentary about iron ore, and BHP, Fortescue Metals and Rio Tinto have all had relatively tough weeks. The banks continue to do well, with the Commonwealth Bank almost hitting $100 per share. On one day, Wednesday, the S&P/ASX then lost $43 billion in value. Talk about volatile. The Aussie dollar had a muted week. It traded between 77 US cents and 78 US cents, and for most of this year, it's been around these levels. It's a bit higher than the Reserve Bank would like, but at least it's stable. Gold prices rose this week on the back of growing fears about inflation. Gold is a store of value and tends to do well when people are worried about price rises. Oil prices, in contrast, fell as talks between the US and Iran on nuclear arms made progress. By the end of the week, there were suggestions that the US would lift sanctions on Iranian oil, which would add to the global supply. That pushed the price lower. Throughout the week, Prime Minister Scott Morrison came under constant pressure to back down on his stance on closed borders. ScoMo said borders won't reopen anytime soon because that was best for the health of the community. But business leaders disagree, with the bosses of both airlines, Qantas and Virgin, calling for a relaxation of restrictions. Overall, it was a pretty good week for Australia on the COVID-19 front. No new cases of community transmission and signs that the vaccine rollout, finally, is picking up pace. More than 3 million jabs have now been given, with a daily pace at around 100,000, thanks to new mass vaccination centres in Melbourne and Sydney. The head of Federal Treasury, Stephen Kennedy, came out this week and said the $1.6 trillion in Commonwealth debt over the next decade was affordable, while the minutes of the Reserve Bank board meeting suggested inflation may spike this current quarter due to strong demand for steel in China and supply chain disruptions, but the central bank believed it will only be temporary. The Westpac Melbourne Institute Index of Consumer Sentiment fell by nearly 5% this month, but it had hit a record high in April. People still seem pretty happy. Staying in the economy, the signs that the housing market might be coming off its ferocious pace kept emerging this week. Auction rates were good, but not as strong as they were a month ago. There was a report out from property group REA saying the big house price increases, fewer buyers, and the cessation of government incentives had dampened demand. And then the Victorian government, in its budget, whacked on higher stamp duty and land taxes. And finally, in the economics world, retail sales jumped during April. Turnover had been a bit weak earlier in the year, but things seem to be picking up. This week, the Fair Work Commission ruled that a driver for Deliveroo was an employee of the company, not an independent contractor. That means he and his brethren are entitled to employment rights and protections such as a minimum wage, holiday pay and superannuation payments, as well as protection from unfair dismissal. This is a big decision for the gig economy. It potentially undermines the whole economic basis of companies that use contractors to lower costs. The federal government finally announced its $600 million plan to build a new gas-fired power station in the Hunter Valley in New South Wales. Energy Minister Angus Taylor said building the plant would keep energy prices low, create jobs, keep the lights on, and help reduce emissions. I think it'll be interesting to see how the government can build a gas-fired power plant and still reduce emissions. The Victorian government delivered a budget which pretty much no one liked. The Labor government introduced a mental health levy worth close to $3 billion over the next 4 years on about 9,000 businesses across the state, as well as the increase in stamp duty and land tax I've already mentioned. The budget also increased taxes on motor vehicles, insurance and gaming, but boosted spending on infrastructure. In corporate news this week, it wasn't such a good one for Crown Resorts, with inquiries in Western Australia and Victoria unearthing details of the gaming giant's operations that perhaps it would have preferred remained buried. Also, the board of Crown rejected private equity group Blackstone's bid, saying the $12.35 a share offer undervalued the company. But the Crown board was interested in hearing more about the Star Entertainment Group offer. There's a lot more to play out on this story. Staying in the gaming space, Aristocrat Leisure's share price surged after the gaming machine manufacturer outlined strong growth. You can't say Australians aren't good at gaming. It was a pretty good week for oil refineries Ampol and Viva Energy. In fact, it was a great week. The two received a $2.3 billion support package to ensure the remaining refineries in the country stay open. Basically, the government has underwritten earnings at Ampol and Viva, and shareholders liked the idea, why wouldn't they? And their share prices surged. There's also money to help the refineries become greener. Canberra is determined to keep local facilities open that can turn unrefined fuel into petrol for cars and jet fuel for planes. Qantas said it was starting to emerge from the COVID-19 pandemic, and it expected a sustained rebound in domestic travel demand and a pickup in its freight and loyalty divisions. But it will lose around $2 billion this year, and total lost revenue from the start of the pandemic till the end of June this year will be around $16 billion. Whooshka! There was a run of agribusiness reporting profits this week. The recent rains have helped the sector no end. Elders and New Farm both reported higher profit and earnings. EML Payments provides digital gift cards, sports betting and salary packaging. Its share price fell 46% in one session after the Central Bank of Ireland said it was worried about EML's Irish subsidiary called PFS Card Services. That was all about money laundering. 46% in one session. I reckon that's the fastest tumble on the top 200 this year. And what a week for Newey, the biggest float of 2020. A Nine Entertainment newspaper investigation reported that there were concerns about the data analytics group's corporate governance. Its share price tumbled, and by the middle of the week, its market capitalisation was half the level of its listing. Management came out and did a mea culpa, and its share price surged, though it's still a long way behind where it all started back in December last year. In overseas news, the fighting in the Gaza Strip between Israel and the Palestinians dominated headlines. In some of the worst skirmishes since 2014, more than 100 people were killed as rockets were fired from both sides. The Biden administration and United Nations both got involved, and at the time of broadcasting, an uneasy truce had been reached. The COVID vaccine rollout continues, with the United Kingdom, the United States and China all having inoculated tens of millions of people. The free trade agreement between the UK and Australia is edging closer to completion with a target date for next month. It would be the first FTA post-Brexit for Britain. The European Union said the region was open for holiday makers in the northern summer. Despite the COVID-19 craziness, that pushed stock markets higher. An International Energy Agency report said for the world to reach net zero emissions by 2050, there needed to be no new investment in coal or gas, while 4 times the number of solar and wind projects were required. The report also said investment in renewable energy sources such as hydrogen and carbon capture needed to be supercharged. And in the business world, US telco and media giant AT&T did a deal with Discovery to merge assets to take on Netflix in the streaming world. And then, a day or two later, media reported that Amazon was in talks to purchase movie studio Metro-Goldwyn-Mayer for $9 billion to create yet another streaming giant. Now I get to the point in the program where I go through the biggest story of the week, the sleeper story, the most remarkable story, and my favourite story. The biggest news story of the week was the labour market. Wages grew by 0.6% during the March quarter. That's still low, but better than the anemic growth in the middle of last year. The Reserve Bank wants to see wages growing to help put inflation back into the economy. And then later in the week, the Australian Bureau of Statistics Labour Force survey showed the unemployment rate had dropped to 5.5% last month and was well below the peak unemployment rate of 7.5% last year. What was most impressive was that even though JobKeeper ended in March, there were almost 34,000 new full-time jobs created in April. There were 64,000 plus part-time jobs lost, but in economics, the trend is your friend and the labour market is trending the right way. The sleeper story of the week involves cryptocurrencies. It was certainly a wild ride for the digital tokens this week. On one day, Bitcoin fell 33%, only to rise to 31% later in the session. Now, there wasn't anything sleepy about that. But 2 things happened this week that could undermine cryptocurrencies. The first was Beijing saying digital tokens couldn't be used for purchases in China, the world's second largest economy. The second was the Biden administration saying it was considering new tax rules. Under those rules, transferring money using cryptocurrencies of amounts more than US $10,000 would attract attention of regulators. Now, two of the reasons digital tokens like Bitcoin are growing in popularity is that they're increasingly accepted and they aren't tracked by authorities. The two decisions this week could well undermine the surge in those currencies. The most remarkable story this week was about inner city apartments. While the property market is hot, the inner city apartment market is not. A survey from Digital Finance Analytics said more than 2,000 apartments in Melbourne and almost 2,300 in Sydney were about to hit the market. Investors have been stuck with vacant apartments as international students stop coming to Australia. There could be some very cheap apartments up for sale. Given everything else in the housing market, that's remarkable. And my favourite story this week was all about fear and greed. I'm talking about this podcast you're listening to. We turned 1 year old. We've had more than 1.3 million downloads, created 720 plus episodes, and had some great support from advertisers and sponsors. However, the highlight has been the listening public's response to what we do every morning 7 days a week and every afternoon 5 days a week. From Adam Lang, Michael Thompson and myself, thank you. And that's everything you need to know from the last week. I'm Sean Aylmer. I, of course, will be back on Monday morning with the Fear and Greed business headlines. I look forward to your company then.